What if I told you you don't need to save 20, 15, 10, or even 3% down to buy a house? Today I'm going to share with you a really fantastic way that many of our clients have been able to bridge that gap from renting to homeownership without having to wait to save a down payment. My name is Mike Novak, part of the Novak Real Estate team at Real Brokerage. Our team helps about 250 families each and every year right here in Snohomish County make a move. If you're thinking about buying or selling, reach out to me. All my contact information is down below. Myself or one of our agents are happy to hop on a call with you and discuss exactly what your goals are and see if it could be a good fit to help you achieve those goals. Okay, so let's jump into this loan program. This has been a game changer for years for our clients, and it's kind of come back to life in the last couple of months, okay? We did a lot of these in 2017, 18, 19, even 20, and then 21, 22 kind of died off, but now it's back. And a lot of people are starting to use this program again. It's the Down Payment Assistance, or DPA program, also called the State Bond Program. It's ran by the Housing Authority of the state of Washington, and it's designed to encourage home ownership, okay? So it's a pretty cool program, and it is maybe the best option for you to buy a home without having to wait to save money. Here's the thing that I've ran into with clients in the past. If you wait to save a down payment, you are basically reducing your purchase power every single month as the market continues to go up. Right now, our market is up 7% from the same time last year. So as you sit idle and you don't own a home and you're not building equity, you're losing purchase power because you don't have a stake in the market, okay? It's a really important dynamic to think about. So you're better off buying a home with a 0 or low down payment than you are saving 20%, and homes have now gone up 50% over that period of time it took you to save that money, okay? So think about that dynamic. But what is this program and how does it work? Well, so there's some requirements that I want to go over with you. If you meet these basic requirements, odds are pretty good you're going to be a good fit for this program. You need to have a 620 credit score on average or higher, which most folks will have. You need to have a certain amount of income limited in the family, like you can't make $500,000 and then actually be able to go buy a house with 0 down. So there's income restrictions on the loan. The income limit is changing continually. As of the shooting of this video, it's $180,000. If you've got like a husband and a wife that are buying together, it doesn't have to be like the combined total. You could just put one person on the mortgage to keep the income limits below that amount. That is definitely an option to talk to with the lender. So if you meet those requirements, like the odds are pretty high that you could possibly qualify for this loan. You don't really need to be a first-time home buyer either. It's just often this program is used by first-time home buyers. So keep that in mind also. The way this program works, they will give you 3, 4, or 5% towards your down payment. It's not just a gift though. This money sits as a silent second mortgage behind your first mortgage. When I say silent, that means that you're not going to be making payments on it, and it's not going to be accruing interest as it's sitting there. You will pay it off when you refinance your property later, or if you sell your home. It's just silently sitting there behind the first mortgage. Your first mortgage will likely be an FHA or a conventional mortgage. An FHA mortgage, as an example, is 3.5% down, okay? So if you've got a 3.5% down FHA mortgage, and you're getting 5% from the down payment assistance program, you obviously have a surplus of 1.5%. That's fantastic because that could potentially cover most, if not all, of your closing costs. I've done some videos breaking down what to expect on closing costs, but most of my clients are seeing closing costs between 1.5% and 2%. So this is your way, this is your path to buy a home and to be able to keep your cash on hand. Or if you don't have any money or you just have a limited amount of money, this is definitely an option for you. I'd still love to have you have $5,000 to $10,000 to buy a house, just money where you can have some cushion to, moving is expensive, buying a home can be expensive, there can be things that pop up, furnishing a house is expensive, but ultimately you don't need a ton of money to buy using this program. If you compare and contrast this to renting, it is a significantly better option. I'd rather have you do this than continue to rent a home. Obviously, when you buy a home, you are building appreciation. You're getting the tax benefits. You're not paying somebody else's mortgage. And maybe most importantly, you're bringing massive stability to your family. You're not moving around every year, every couple of years, changing school districts. So you've got a place, a home for your family to be anchored to, okay? There's also one other requirement to think about, and that is the loan limit. It's $977,000 right now. This is, again, is changing, but you just want to make sure that the home you're buying is going to be below that number. I'm sure it would be if you're going to be using this program, so definitely just make sure that you're below, like you can't go spend $2 million on a house using the down payment assistance program. This doesn't make a ton of sense. But they try to balance out the limit to this loan amount to the conforming loan limit within Snohomish County. County. And obviously that number's gone up a lot over the last couple of years. To give you kind of like a boilerplate scenario, let's say that you make $15,000 a month. Well, you could spend up to about 46% of that on your debt to income ratios on a house. Doesn't mean you have to, but you theoretically could. So that would put your payment around $6,900 a month in today's money. That'd give you a purchase price of about $935,000. Well, you can still buy a fantastic house for $935,000. So if your income in your family is around that number, then this could make a ton of sense. And again, I'm not saying you have to spend 46% of your income on a house. That's just kind of like the upper end of the parameters. Obviously, the lower the better. You don't want to be house rich and cash poor, of course, but you have to balance how much you're willing to spend on a house versus how much you want to have for free money as well, or freedom money to do things like travel and things like that. So keep that in mind. If you've got questions about the down payment assistance program, please reach out to me. I'm happy to connect you to a local lender that's helped a lot of our past clients with this program. I really do firmly believe in this program. I've had dozens of clients use it over the years. I always love getting a call from a client. Like I sold one in 2017 using this program to a client in the Frylands in Monroe. They paid $350,000 for that house. That house is now worth $820,000, okay? And they used this program to do it. They bought a house with about $2,000 out of pocket. And this program allowed their family to have the stability of an amazing home in a great area, and the home prices more than doubled over that time. If they had waited to save a down payment, they probably would have priced completely out of the market. It's just purely that simple. If you got questions though, reach out to me about this program.